So let's start with the introductions. So my name is Blessing Mlambo. I'm currently doing my final year at the University of Cape Town, majoring in BCom Financial Accounting. I have quite some experience in tutoring. I started tutoring, I think, 5 years back, and currently I'm tutoring like 2 courses for the University of Cape Town. So if you happen to come to UCT next year and do a commerce degree, chances are you might find me there as either one of your tutors or uh, you'll see me there. But yeah, so I have experience tutoring for UCT. I also run a tutoring company called Genius App. And I also run this other venture called iTune, whereby we teach music creators how to turn their music into a business. So I have quite a lot on my plate. And recently we're launching this coaching business. But what's the purpose of this master classes? So we realized that most people really cannot afford one-on-one sessions. So we said, okay, cool, let's bring this free master classes whereby I come and then I help you for free, right? So it's just me giving back to uh, you guys. So I hope you guys enjoy this master classes. So let's go. I'm done with my introduction. So you guys can introduce yourselves. You can just type on the chat, where are you from and what do you love doing? So you can just type that and then we'll get going. For the next 2 minutes, I'll just be reading through some of your messages and then we're gonna move. Let me just admit people into the meeting in the meantime. Can you guys hear me too? I don't see any introductions in the chat. Can you guys hear me? I'm Kiamuhits, you currently in Matric. I enjoy reading as a hobby. Nice, nice. I also enjoy reading. What type of content do you usually read? I don't like fiction. We can start there. But I'm a huge fan of self-help books. So what type of content do you like reading, Kia? And the others can introduce yourself and what do you love doing or what do you enjoy doing? So you'll forgive me, I have like a lot of screens in front of me, so I'm trying to look at the different screens and navigate everything. But I hope it's gonna be a smooth one. Tracy, nice to uh, hear from you, Tracy. You love playing soccer. I have a couple of friends who also love playing soccer, but I really don't play soccer. But at least I go to the gym and I also watch soccer, but it's chilled. I love social media as well as reading books. Nice, you love social media. In what sense? Like TikTok. You're always scrolling on social media. And Putty, I enjoy binge watching. Crazy. Putty, what are you currently watching now? Siamo likes making money. I guess we all like making money, eh? Yeah, so nice to meet you guys. Nice to meet you. I hope we're going to connect on a deeper level. So these master classes are gonna be a monthly thing. I'm gonna be hosting the master classes monthly. So I hope to uh, see you more often, And if you're brave enough, you can just turn on your camera and you can have more of like an interaction. Because now I'm seeing like your names only, and I don't see any faces. So if you're brave enough, you can just turn on your camera. But we can move. So I said I'm going to introduce the accounting mastery course, right? So why spend over 8,000 Rand on tutoring a year when you can spend only 250? So with my extensive knowledge on accounting, what I did is I created a 4-hour plus video course, expanding course. I'm going to be adding more content on the course on a weekly basis, on a monthly basis. So what's going to happen is I'm gonna be adding more content on this mm, accounting mastery course, right? So I'm just trying to admit people and then it's distracting me. So you can get the course. I'm going to share the link with everyone after this uh, meeting so you can get the course. So what I like about the course is it introduces you to the basic principles, and then after then what it does is it gives you some sort of a quiz which you can complete to see if you understand those principles, those accounting principles. And then after then, I work on a hands-on example. So you get also like videos whereby I work on certain question papers, and then you get to follow my thinking process and whatever. So the goal of the course was like people shouldn't spend so much on tutoring if you can just get this jam-packed video course for only 250 rand, and then you watch all your videos on your own pace, and then you also get to be ahead of the teacher, if that makes sense. But I'm going to show you the course at the end, and I'm also going to share a link with you guys at the end. So they say there's a giveaway at the end. So you better stay until the end because I'm going to be doing some giveaways. And so Tracy says, sorry, quick question. Will the past paper be IEP or GTE? So it's going to be GTE. So I think that's one thing my team didn't factor in, that we have to do separate master classes, but the logistics, we're gonna figure them out. But what I realized is the accounting principles are the same for both. It's just that with IEB, they usually go in bit deeper. Not really, because I remember when I was in Matric as well, I used to use IEP question papers to practice, and then there's really not much of a difference between IEP and GTE accounting. It's unlike maths, whereby IEP they go deeper on maths, and then with uh, GTE or NSC they don't go that deep in maths. But yeah, so today I'm gonna be working on a GDE question paper or NSC question paper, but the principles are the same. So if you grasp the principles, then you get value out of it. So how long will the class be for? Because I have load shedding in 2 hours. So the class is only going to be 1 hour. I'm not going to be working on a lot of questions. What I've realized is most teachers, they try to do a lot. I'm not going to do a lot. I'm going to do only 3 questions, but I really want you guys to get the principles, because once you get the principles, then you can answer any question that they give you. So I'm going to be going through a few questions, especially fixed asset, because I've realized that most students are struggling with fixed assets. So I'm going to be going through fixed assets. Then let's go on to the business of the day. We can work on there. We can work on the question paper. So I'm just going to stop sharing using my laptop and share using my iPad. Let's go. You guys can see share screen. Let's just wait for it. Can you guys see my screen? Hey, cool. Let's go. Let's go. I'll just try to expand this side. And then I'm going to be working through the question this side. So we're gonna be working on question 1. So I picked this question paper specifically because 2020 was my favorite year. Right, 2020 it was the crazy year, COVID and all, but still it's the year whereby I started most of my businesses and ventures, and yeah, it's been a blessing. So we're gonna be working through this question paper. I'm only going to do question 1.1 and 1.2, right? So we're gonna spend time, we're gonna dive deeper into question 1.1 and 1.2. And I'm gonna be taking you through the principles. So once you grasp the principles, then it's going to be easier for you to answer any other question. So after this masterclass, I don't want you to say, I really don't get how fixed assets work. I really don't. If you didn't watch the YouTube video that I put up, I think last week on fixed asset, make sure that you go and watch it because it also takes you through some of like the principles we use in fixed assets. But today I'm going to be covering some of the stuff. So here's what's going to happen. I see a lot of WhatsApp messages. People are saying some of them they can't interact because they joined as a guest. So is it possible they have message related policies that will apply to the chat? I don't know if I can enable. So I don't think I can do that. But if you have a question and you can't post it on the chat, remember that you can just raise your hand and then I'll tell you to unmute and then you can ask your question. Right. So we can start working on the question. So remember, I said accounting is a process. So when you get into that final exam, when you get into that prep exam, you need to have some sort of process of how you answer your question. So we call it exam technique. So usually the first thing you look at is your time allocated for the question. So for this question, they say you must spend 45 minutes. So if 45 minutes hit while you're not done with this question, make sure that you move to other questions, because what usually happens is people will waste time trying to finish a question while they're losing easy marks that they could get on the other questions. So I like talking about this thing called the law of diminishing marginal returns. So in economics, we have the law of diminishing marginal returns. The more time you spend doing something, the return or the benefit you get declines. So if you spend like 45 minutes answering this question and you haven't finished the questions, it means that some of the things that you're still trying to answer, you really don't get them. So the benefit is not that high. You should move on to other questions whereby you can score easy marks. So we know we have to spend 45 minutes on this question. And then after, the second thing you do is you go and read the required. What's nice about high school accounting is they always start you with the required and then the additional information at the bottom. So when you get to varsity, you'll see that they give you the information first and then the required is at the end. But you should know that exam technique is you must start reading the required so that you understand what's required of you before you start reading the information. Because when you're reading the information now, what you're trying to do is you're trying to answer your questions. So let's read our required. So for 1.1, they say refer to information BA for fixed assets, right? So they tell you refer to information BA for fixed assets. So you need to keep that at the back of your mind. So see that I'm highlighting, this is also some exam technique. I'm highlighting that, okay, I remember when I'm answering 1.1, I need to refer to information BA for fixed assets. They say calculate the missing amounts denoted Roman figure 1, 2, 3 in the fixed asset note. And then they give you that 11 marks. So I go and look at the fixed asset note. Okay, this is the fixed asset note, and I can see here are the uh, amounts that they require me to calculate. But okay, cool. Let me just go finish reading my required, and then I'm going to come back to answering that question. The second question, they like calculate, we're still on calculating the profit and loss on sale of equipment on 1 October 2020. So this business, they sold equipment on the 1st of October 2020. And here they're telling you, okay, go and calculate what's the profit or loss that was made on this sale of equipment. Okay, cool. We'll see that. And then 1.2, they say refer to information BE for trading stock. So now you should go and refer to information BE, which talks about trading stock. And then they say calculate the trading stock deficit. So what's the trading stock deficit? So usually the trading stock deficit, I'll just introduce it, is when we have two concepts, right? You must keep these concepts at the back of your mind. You have I don't know if this is the term we use in high school, but in accounting, we usually refer to it as the theoretical balance. That's not the right spelling, but don't focus on the spelling. The principles behind it are what's important. So we have the theoretical trading stock, right? The stock that our book says we have. So our books, they usually say we have this much stock. Remember, when we buy stock, we update our book. When we sell, we update our book. So our books will usually say this is how much stock we should have in the business. But we also have actual. I don't know what happened there. Okay, cool. And we also have actual. So this is stock according to our books, and actual is stock according to physical stock count. So remember, theoretical stock is like the stock that our books says we must have, right? Our books, they tell us, okay, we should have this much stock. But when we do a physical stock count, we realize that we really don't have the same balance that our books are saying. We have a different figure. We call that the actual stock. What causes the difference is usually people stealing the stock, or the stock being damaged, and then all those kind of things. So basically, the difference is caused by things like that the stock was stolen and whatever. So it causes this difference. So if your actual stock, meaning that the stock that you have in the business, the stock that you see in the business is lower. So if actual is lower than your theoretical stock, meaning that the stock that your books reflect, then you have a trading stock deficit. That's the whole idea. But if your actual, meaning that the stock that you see in the business, if that stock is greater than your theoretical, meaning that the stock that your book says you must have, then you have a trading stock surplus. But here they told you that you must calculate your trading stock deficit, meaning that when you go and read your information, you already have it at the back of your mind that, oh, your actual stock will be less than your theoretical. Then that causes a trading stock deficit. And then you need to calculate the value of that stock that was lost, meaning that your actual is lower than what you should have. Your actual is lower than what you should have. Therefore, that difference was stolen in a way. So you have to go and calculate the amount. So I was just giving you a background information and my thinking process on the question, but now we're gonna start answering the actual questions. I'm just gonna scroll back. I'm gonna come back to this. Let me admit people. Admitted. So let's go. Question number one. Calculate the following missing amounts denoted 1 to end the fixed asset register. We go. This is where we're looking at. Right? We're looking at A, whereby they say fixed assets. So they say, let me just say, so admit. So vehicles, the business owns 2 vehicles. What's happening? Okay. Who has their mic on? Okay, cool. Muted everyone. So can you guys still hear me? Yes. Okay, cool. You guys can still hear me. I'll just, what happened now? Yes. Okay, cool. So information BA, they tell you that the business owns 2 vehicles, right? So that's important because now you know that, okay, the business has 2 vehicles. And coming now, let me just open for someone. back now. Okay, cool. So they tell you that the business. Oh, what's happening to my screen? What's happening to my screen? Technology. Eh? Okay, cool. So they tell you that the business has two vehicles. So that's very key to note because now you know that they have two vehicles on the 28th of Feb 2001. So one thing that we missed is the financial year end. So it was very key for us to identify what's the financial year end at the beginning of the question. So they told us that the financial year end is the 28th of Feb 2021 and it started on the 1st of March 2020. 2020. So this is your financial year end. It started on the 1st of March 2020. It ended on the 28th of Feb 2021. So here when they tell us that the business has two vehicles, they tell us that on the 28th of Feb 2021. This is at the end of the financial year, right? And then they tell you that the second vehicle was purchased on the 1st of November 2020. So if you look at the 1st of November 2020, this is at the middle of the financial year we're dealing with. Because if you look at the 1st of November 2020, there's somewhere here in the middle. So they tell us that the second vehicle was purchased on the 1st of November 2020, meaning that at the beginning of the year, we only had one vehicle in our business. So at the beginning of the year, we only had one vehicle in our business, right? So that's very key to know. That's my thinking process. Now I know that okay, the parents at the end of the year they have two vehicles, but they bought one during the financial year, meaning that at the beginning of the year they only had one vehicle, right? And then they tell you that the vehicles are depreciated using the 15% per annum on cost, right? So that's how you depreciate vehicles. Remember, you have two methods, right? You have the cost method, and you also have the diminishing marginal um, balance method. So they tell you that vehicles is the cost method. And then you go to equipment. So with equipment, they tell you that depreciation is 20% per annum using the diminishing balance method. And then they tell you that unused equipment was sold for 40,000 on 1 October 2020. That's during the financial year. So for equipment, they sold equipment during the year. And then they tell you that the accumulated depreciation for the equipment that was sold was 36,600 on the 1st of March 2020. So on the 1st of March 2020, which is the beginning of the year, it's very key, beginning of financial year, the accumulated depreciation was this. They sold this equipment for 40,000 on the 1st of October 2020. So now we've analyzed our information. We have enough information to go and do what? And answer our questions. So Tiamo says, I can't see the screen. Is it the same case for everyone? Just thumbs up if you can see my screen. If you can see my screen, just give me a thumbs up. Okay, so other people can see my screen, meaning that Siamo, you're the only one who can see my screen. So I advise you leave the meeting and rejoin again, and maybe it's going to fix the problem. So now we've analyzed our information. that's how you should be going through this question when you're reading the information. So there's some things that have to trigger in your mind. Okay, this date is in the beginning of the financial year. This one is at the middle. Oh, see, they sold equipment. Like here, you know that, oh, here they sold equipment, right? And here they bought equipment. So this is all the information you that's triggered in your mind when you're reading this question. So let's start answering our questions now. Remember your question number one, they said we must calculate these values over here, right? I'm just gonna erase. So the first one, which is, if I go and then say, let me change the color of my pen to black. So we're doing 1.1 and we're doing 1.1.1, right? And then we're trying to calculate Roman figure 1. So how do we calculate Roman figure 1? So Roman figure 1, the thing we're trying to calculate is the carrying value of the vehicles at the beginning of the year, right? So this one is a simple one. It's one of those marks that they just giving it to you guys because they're saying, okay, cool, you know how to use the calculator, because you really don't need to think. You just need to punch the numbers in your calculator and then you get the answer. Because the carrying amount, you know that carrying amount is always your cost minus your accumulated depreciation on that day, right? So this is your formula for carrying amount. So your carrying amount or your carrying value, so they call it carrying value. Here they call it carrying value. I'm just gonna abbreviate and say CV. So your CV is equal to cost minus your accumulated depreciation. And they gave you the cost at the beginning of the year for vehicles. They said, okay, your cost is 460,000, right? And then they also give you the accumulated depreciation. They say it's 396,750. Is that correct? Yes, 396,750. Therefore, if you punch this in your calculator, you get your answer for your carrying value of vehicles at the beginning of the year. How much do you get? 396,750. So you get 63250. So 63250 is your carrying value of the vehicles at the beginning of the year. Happy days. So if you don't have a question, you can just post it in the chat and then we'll work through it. And then we go to question, the same question, but now we're trying to calculate Roman figure number 2, which is the depreciation on vehicles for the year. So this is the depreciation on vehicles for the year. So this is the fixed asset note. So if you don't know the structure of the fixed asset note, then this is a structure of the fixed asset note. If maybe they say prepare a fixed asset note when you're doing a balance sheet or the notes to the balance sheet. So usually we just have our different classes of assets, and then we're trying to say, okay, this is the carrying amount at the beginning, here are the movements, and this is why we see this value at the end. But I'm going to be unpacking the fixed asset note when we get to the balance sheet and the notes to the balance sheet. But for now, I just want to pick out these key things. How do you calculate that carrying value? How do you calculate the depreciation? So now they say, how do you calculate this depreciation, which is your Roman figure 2. So I have this, I don't know if I should call it a trick or whatever, that I was using in high school when I'm calculating my depreciation. So I always say, whenever I see calculate depreciation, when I'm in the income statement or I'm doing the balance sheet or the notes to the balance sheet, I always start with, I write my 3 letters, son. So you see, I write my 3 letters in, did I call it vertically, a vertical order, and I say son. So what does son stand for is sold, old, and new. And new. So here what I'm basically saying is I'm going to calculate the depreciation on all the sold items and then calculate the depreciation on all the old. By old, I mean those assets that have been in the business from the beginning of the financial year all the way up to the end of the financial year. So that's your old assets. And then we have new. New are those assets that we buy during the financial year. So the assets that we buy during the financial year, those are called new assets in a way. So this is my structure for calculating depreciation. I just write son, son meaning that sold, old, and new, so that I can cover all the components of depreciation. And I advise you, every time you're trying to calculate this depreciation, always start with the new. Why? Because it's always easier to calculate the depreciation on new assets. So you go and say, did they buy any assets during the financial year? Yes, remember we said in terms of vehicles, and we're calculating the depreciation of vehicles, they bought the second vehicle on the 1st of November 2020. And what method do we use to depreciate this asset? We're using the straight line method, meaning that the 15% on cost. So we only need to find the cost of this new vehicle multiplied by 15%, and then apportion it for the amount of time it has been, or the amount of months it has been in our financial year for the current financial year. Because remember, we bought this vehicle during the financial year, so it didn't stay in our business the full year, but it only stayed in our business for a couple of months because it was bought on the 1st of November 2020. So what's the cost of this new vehicle? You go and ask yourself, did they give you the cost? No, they didn't give us the cost explicitly. But here on the fixed asset note, they gave us additions. So additions are all the vehicles that were bought during the financial year. So we can safely say this 510,000 is the cost of the vehicle that was bought during the financial year, since we know that only one vehicle was bought, and it was bought on the 1st of November 2020. So we can go and say, oh, the cost is 510, 1, 2, 3. Remember, vehicles are depreciated on straight line method or on cost. Therefore, we need to multiply this 510 by 15 multiplied by the number of months it has been in our business. How many months has it been in our business? You count. They bought it on November, meaning that it's November. So it's the 1st of November, meaning that we include November. November, December, January, February, which is the end of our financial year. Therefore, it has been in our business for 4 years. November, December, Jan, Feb, right? So you need to go and multiply by 4/12. And then that's how you get your depreciation on the new vehicles. So I'm just going to calculate it on my calculator, then 4/12. So make sure that as I'm working through these questions, you also doing your calculations on your calculator, so that if maybe I punch my calculator wrong and I give you the wrong figure, you can just correct me. You can pop it in the chat and correct me. So let's go. So we're done with depreciation on the new vehicle, right? So this is our structure. We're calculating for new first, and then after new, I advise you to go to sold, right? So it's your son. You always start with new vehicles, and after new, you jump to sold. So you say, are there any vehicles that were sold during the financial year? No. In our information given, there was no vehicle sold. There was only equipment sold. But here, we're only calculating depreciation for the vehicles that were sold, or for vehicles. So no vehicles were sold. So you can just say none here. So we know that none were sold. And then we go to old. Remember, I said old are those vehicles that have been in our business for the whole year. And since we know that we only have two vehicles at the end of the financial year, one was bought during the financial year, we calculated its depreciation here. Therefore, meaning that the one vehicle that was there at the beginning of the financial year is the one that stayed for the whole year, because nothing was sold during the year. So how do we find the cost of this vehicle that was sold? Because remember, depreciation on vehicles on cost. If you go to your fixed asset note, cost on the 1st of March 2020, remember I said at the beginning of the year we only had one vehicle. The other one we bought it during the financial year, meaning that the cost at the beginning is only associated with the cost of this one vehicle, this old vehicle that has been in our business from the beginning of the financial year to the end of the financial year. So it's old because it's not something that we bought during this financial year. So you can say, okay, the cost is 460,000. You multiply it by 15%. Do we need to apportion it for any months? No, because it has been in our business for 12 months. So you can just say times 12/12, or you can just leave it because 12 over 12 is equal to 1. And if you multiply anything by 1, you still get the same answer. Therefore, it doesn't matter. So for old vehicles, we don't apportion them for any months. So you just punch it in your calculator. How much do you get? How much do you get? How much do you get? How do you get? I get 69,000. I get 69,000, right? But here's the catch. Here's the catch, right? I love this question because your depreciation for the year is not going to, for the old vehicle, it's not going to be 69,000. That's crazy, right? So you calculated it correct, it's 69,000, but it's not going to be 69,000. It's not the amount that's gonna go in your income statement, and it's also not the amount that's gonna go here for the old vehicles, right? Why? Because if you remember, for question 1.1, we calculated the carrying value at the beginning. We calculated the carrying value at the beginning for that one vehicle that was there. Remember, we said there was only one vehicle at the beginning of the financial year, and this is the vehicle that we're calculating depreciation for here. But at the beginning, question 1.1 Roman figure 1, we calculated the carrying value of this vehicle, and then we said it's 63,250. So if the carrying value at the beginning was 63,250, we cannot depreciate this asset to a negative. So that's the general rule in accounting. Whenever you have assets and then you're depreciating them, remember we said depreciation is saying we're buying this asset or we're buying this vehicle for this much, and we're going to depreciate it as we use it, meaning that we're decreasing its value as we use it, right? But we're going to reach a point whereby we fully depreciated this asset, meaning that we can no longer depreciate it. We can't put an asset as a negative in our financial statement and say the carrying value is negative something something, right? And also we cannot put an asset in our books as zero. So the only value that we can put in our books if an asset is fully depreciated is 1. So if you look at this vehicle we're dealing with here, we're saying your carrying amount was 63,250. This current financial year, we want to decrease that carrying value by 69,000. What amount are we going to get if we do that? What amount are we going to get? Let me just write it down. 63250 minus 69123. We're going to get negative 5750. According to accounting, this is not allowed. You cannot depreciate an asset until the carrying value is at its negative or it's at zero. You must show it at a certain amount in our books, and that amount is 1. So whenever you fully depreciated an asset, you must show that asset at 1, meaning that the depreciation that we process for this current financial year is not going to be 69,000, but it's going to be this whole amount, which is the carrying value at the beginning, minus 1. So we're going to say, okay, depreciation for the year is equal to 63,250 minus 1. And then we're going to have 63,249. So this is your depreciation on the old vehicle that we're going to process. Now you see that if we're taking this carrying amount at the beginning and then we're decreasing it by this value, this depreciation for the year, we're going to be left with a carrying value of 1, right? Of 1 in our books at the end of the financial year, which is correct in terms of accounting principles. I see a hand by, yeah, it's, I don't know how to pronounce the name. Is it Agedi, Agedi or Agedi? You can just unmute your mic and then you can correct me on how I pronounce your name and ask your question.
Sorry, my name is Ons D. I wanted just to ask
Your
if you
name is,
can repeat about.
your name is
Sorry, Ons D.
Osti.
Yes, great. This, but yeah. Sorry, I wanted to ask if you can repeat about the minus one because I'm struggling with this one.
Okay, the minus 1. Okay, cool. I'll repeat it right now. I saw another hand, I think it was from Siamo, if I'm not wrong, and then it went down, if I remember properly. Okay, cool. Let's repeat the -1 part. I know most students, they usually struggle with the -1 part, right? I'll just erase here. I'll just erase and just erase and just erase. So, so cool. Let me just do this, right? Nah, I shouldn't have. Okay, cool. Do we, let me just write, what was the amount here? 69,000. So are we all on the same page on calculating this depreciation and then saying 69,000, how we calculated this depreciation? Cool, cool. Yes, I see thumbs up, thumbs up. Yeah, cool, perfect, right? So the depreciation we calculated is 69,000. But what I'm saying is, remember, in accounting, we buy an asset, right? And then we put it at cost on our books. And then we try to decrease its value over time using depreciation, right? As we decrease its value, the carrying value keeps on getting smaller and smaller and smaller because we're using this asset and then we're depreciating it. So what happens is, according to accounting principles, an asset will be depreciated until it's fully depreciated, but it can never go to the negatives, right? So what I'm saying is, at the beginning of the year, this vehicle had a carrying value of 63,250. That's the carrying value of this vehicle. Because remember, we said at the beginning of the year, we only had this vehicle, this one vehicle. So this was the carrying value. And then we calculate depreciation for the year. So see depreciation as the amount at which we must go and decrease the carrying value by to get the new carrying value. So what I'm saying is, if we take this 69,000 and go decrease it to the carrying value, go decrease this carrying value of 63 to 50, we're going to end up with a negative carrying value, which is incorrect in terms of accounting principles. So what we usually do is we want to depreciate this asset until it's at a carrying value of 1. Meaning that in this case, we see that, okay, cool, if we use this 69,000 to depreciate this asset, is gonna go to the negatives. So how do we solve that problem? What we basically do is we say, what amount can we subtract from this carrying value so that we only left with the carrying value of 1? So how do we do that? When you say 63 250 minus 1, you get 63 249. So this is the depreciation that you'll process for this current financial year for the old vehicle. Now, if you go and say carrying value is equal to, remember we had this carrying value at the beginning of 63,250, and then we minus 63,249, we're going to end up with a carrying value of 1, right? Which is what we're really looking for, right? So that's the whole idea. So if you just trying to wrap your head around it, say, I have this equipment, it's sitting at this carrying value, right? And then you calculate the carrying value for the year. At the beginning, it was sitting at this carrying value, and then I calculated depreciation for the year. If you're subtracting the depreciation for the year from the carrying value at the beginning, and then you're getting a negative amount, then that's not allowed in terms of accounting principle. So what do? Neglect the depreciation that you calculated for the current financial year. Take the carrying value at the beginning, just minus 1, then the amount you get is the amount we should use as your depreciation for the year. So in total, when we're processing our depreciation now, we're gonna say we're adding all the depreciation from the sold. We didn't have any depreciation from the old. We're taking this one rather than this one, because if we take this one, then our asset will be in the negatives. And then for the new, we take this one. So your depreciation for the year will be the 63,249 plus the 25,500, and then you get 63,249 plus 25,500, and then you get 88,749. I don't know if I answered your question. I don't know if now you can wrap your head around it. Tell me if you still struggling with it, and the others, do you like get it now? Is it yeah? So I don't know if I answered your question. Did I answer your question? Did I answer your question? So Masango says, do we always use this method when we are calculating the depreciation for the old? Yeah, so if you think about it, for the new, you can't really use this method because the new, you bought it this year, so it can't be fully depreciated, right, for the new. So that's not possible. You can't buy an asset this year and then it's fully depreciated this year. But for the old, you're saying I've been using this asset for old and old. So there's a chance that it's fully depreciated now, meaning that we've used almost all of its value, right? But we cannot depreciate it further. So the only thing we can do is we can depreciate it until the value is one, right? Until the value is one. I don't know if that makes sense. And for the sold, you can also use this method as well when you're saying, okay, the sold, it had a carrying value of this much. And for the current financial year, the depreciation was more than the carrying value at the beginning. Therefore, you cannot depreciate it until it's negative. So I'm only going to take the depreciation that makes this value one in a way. I don't know if that makes sense. Just thumbs up if you get it. Thumbs up if you get it. Let me see. Umpimetsi says, are you gonna work on IEP past papers as well, or is it just NSC past papers? So I explained at the beginning that for today I'm gonna be working on NSC, but remember the principles are the same. So if you get like the principles, then you can get the benefit. But for the second one, likely I'll work on an IEP question paper, which is next month. And I encourage also, if you're doing NSC, you can come and join the masterclass, because same thing, when I was doing Matric, I was using IEP question papers to practice for accounting, and the principles are really the same. So you can get the benefit either or. And then only when deep depreciation is calculated is greater than CV, right? Yeah, so only when the depreciation you calculate for the year is greater than the carrying value of that asset at the beginning of the year, that's when you use this method of saying, okay, cool, I'm not going to use the depreciation that I calculated because it's greater than the carrying value. So what I'm going to do is I'm going to take the carrying value of that asset, minus one from it, and then by minusing one, I get the depreciation that I can use for this current financial year that will make this asset to sit at the carrying value of one. Hope that makes sense. I see Kia, you have your hand up. You can just unmute and
So
yes.
my question is a little off topic, but then for the vehicle that is at the carrying value of 1 rand now. So when you
Mm,
take it to your balance sheet, when you're calculating the value of your fixed assets, are you
mm,
gonna add it as 1 rand?
yes, yes. You're gonna edit this one rent so that
Okay, thank you.
that's at as direct I can. But just to give everyone some context on this question, so he's asking that when we're going to take this asset to the balance sheet, are we gonna add it as one? Yes. Remember that in your balance sheet, you add the carrying value of all your assets or your vehicles. So in this case, the old one is sitting at a carrying value of one, meaning that you're gonna add it at a carrying value of one. Hope that makes sense. I see Kia, you still have your hand up. Okay, cool, down, sharp. So we're done with that one. I hope it made sense. We can just, so this structure of writing sun first is very helpful, because once you write sun, you have a structure of how you calculating your depreciation. Remember, you start with your new, then you go to your sold, and then your old. That's how you approach the question. And I'm just gonna do Roman figure 3. So Roman figure 3. So Roman figure 3 is the disposal at carrying value. So remember, the disposal amount that goes on your fixed asset note is at carrying value. So whenever you dispose of an asset, remember in my YouTube video, if you haven't checked it out, you must go check it out. I said disposal is when an asset is leaving the business. Either it's sold, either it's uh, damaged and then we're scraping it, we're throwing it away, or if it's stolen, then we're disposing. So in your fixed asset note, the amount you subtract is the carrying value of that asset that was disposed. I see a hand. Just gonna take this hand. Buhle, just unmute.
Sir, with
Yes.
previous question, why
Yes.
why don't we add the carrying value of the new vehicle to the 1 rand?
Why don't we add?
The carrying value of the new vehicle, because we got a new vehicle, and then why don't we add that value to the 1 rand?
When you trying to put it on your balance sheet?
Yes, sir.
Yes, you're going to do that. I was just saying you're going to add 1 rand in terms of that old vehicle. But you're correct. You're going
Oh,
to 1 rand
okay.
plus the value of the carrying value of the new vehicle.
Okay, thank you.
Happy days. Thank you. So Roman figure 3, remember I said disposals must be at carrying value. So now we need to go and calculate the carrying value of this equipment that was disposed. And then we get the information here. They say unused equipment was sold for 40,000. So it was sold for 40,000. That really doesn't affect your carrying value. It's just the amount that we sold this vehicle at. And then it was sold on the 1st of October 2020. So that triggers you because now you see that it was sold at the during the financial year. It wasn't sold at the beginning of the financial year, but it was sold during the financial year. Remember, our financial year is 28 Feb 2021. It ends on the 28th Feb, and then it started on the 1st of March 2020. So it was sold at the during the financial year, meaning that it will need to be depreciated for the current financial year. We need to calculate the depreciation for the current financial year because this asset was used during the financial year. So that's very key to note. And they tell you that the accumulated depreciation on the equipment sold was 36,600 on the 1st of March 2020, right? So on the 1st of March 2020, the accumulated depreciation was 36,600. This is at the beginning, right? So now we need to go and calculate. Remember, our end goal is calculate the carrying value of this asset. And how do you calculate the carrying value of something? It's your cost minus your accumulated depreciation on that date. So here we're dealing with 1st October 2020. So now we go and say, do we know the cost of this equipment, right? How can we find the cost? And now you think, okay, cool. We had this equipment at the beginning to the value of 360,000. And at the end, we only have 285,000 now, meaning that the difference in that cost is caused by this equipment that was disposed or sold off. Therefore, the cost of equipment sold, you can just get it by saying the cost at the beginning of 360K minus 285K. And then when you do that, you get the cost of the equipment sold, which is 75,000, right? So therefore, this is the cost of the equipment that was sold. Now you can go and say, okay, I have one piece to the puzzle. I have the cost, which is 75,000, right? Now I need to go and calculate the accumulated depreciation on the 1st of October 2020, because remember, that's the date at which this asset was sold. So most students, the mistake they make, they'll go and subtract this accumulated depreciation. But remember, this accumulated depreciation is at the beginning of the financial year. So we need to go and take that accumulated depreciation, add the accumulated depreciation or the depreciation for the current financial year for this equipment, and then we get the total accumulated depreciation for this date over here, right? So you can just say, okay, cool. For now, I know that I'm going to subtract the accumulated depreciation at the beginning, but I need to add the depreciation for the current financial year before I get the carrying amount on that date. So how do you calculate the depreciation for the year, right? Depreciation for the year, remember they said 20% of diminishing balance method. And what's the diminishing balance method? Diminishing balance method is when you're calculating depreciation, what you do is you say cost minus accumulated depreciation at the beginning, and then you multiply it by 20%. That's your diminishing marginal method. Remember, with the cost method, we only said the cost times the percentage. But with diminishing marginal method, you basically say cost minus accumulated depreciation at the beginning, then you multiply it by 20%. So basically trying to get the carrying amount over here, and then you multiply that by 20%. So your cost at the beginning was 75,000. We proved it over here. And your accumulated depreciation they gave you as 36,600. Happy days. And when you subtract the two, you multiply it by 20%. That's your depreciation for the year, right? Let me just say 75,123 minus 36,123. Then you multiply by 20%. You get 7,800. But remember, this asset didn't stay in our business for the full financial year because it was only sold on the 1st of October 2020. So we need to go and apportion this depreciation for the number of months that this asset was used in our business. So how many months was it used in our business? Remember, our financial year starts on the 1st of October, meaning that you're going to say it starts on the 1st of March. So you're going to say March, April, May, June, July, August, September, 7 months. So you don't add October because October, they sold this asset at the beginning of the year. Meaning that for October, it wasn't used in the business. It was only used for 7 months. Very key to see that was it sold at the beginning or at the end. So in this case, it was sold at the beginning. So you say March, April, May, June, July, August, September. You don't add October. So it's 7 months. So you're going to say 7 times 12. And then you get how much? 7 times 12. And you get 4,550. So that's your depreciation for the year. You can go and add it here to get the accumulated depreciation on this date. And then your carrying value now will be 75,123 minus answer 875,123 minus 86,600 minus 4,550. And then you get, let's see, 8,850. So that's your carrying value on the 1st of October, the amount that you're going to put here on your disposal. Then you're done with question 1.1. I'm just going to do 1.1.2 and then I'm going to end the masterclass. So they say you must calculate the profit or loss on the sale of equipment on the 1st of October 2020. So remember, if you watch the YouTube video, I said when the amount we received from disposing this asset is greater than the carrying value of that asset, therefore we made a profit, right? And if the amount we received is less than the carrying value, therefore we made a loss. In this case, we know that we got how much? 40,000 from the disposal, they told you, and then the carrying value was, we calculated the carrying value, 38,850. So it was 38,850, meaning that your amount received is greater than your carrying value. Therefore, you're looking at the profit. What's the profit? The profit is equal to 40K minus the 38,850. And therefore, you get 6,150. That should be your profit for the financial year, if everything is correct. Wait. Let me check something before I end the masterclass. Let me check something. So here we said 75,000 minus 36,600 minus 4,550, right? Therefore, we get that amount as your carrying value. I think there's something I did incorrectly here. So I said 75, 123 minus 36,600 times 20% times 7 over 12. Oh, so this amount over here, if you calculate it correctly, it should be 4,480 and not 4,550. So if you say 7,800 times 7 over 12, you get, no, 75,123 minus 36,600 times 20%. You get here 7,680. And when you multiply that by 7 over 12, you get 4,480. So that's like the correct answer. So it doesn't change your argument, just that it was a punching error on the calculator. So this will be your depreciation for the year, and then it's the amount that you're going to add here, and then it's going to change this amount to 36,600 minus 4,480. It's going to change this one to 33920. And then your profit here, since this one is 33920, say 4123 minus answer profit is 6080. That should be correct now. So I see one hand from Delaney. You just unmute and then shoot.
Hi, I have a question on the disposable. So the 4,480 was the depreciation for the year of the sold equipment, right?
Yes.
So this 4,480, what do we do with this 4,480 to find the carrying value that we add on the note?
So what you do is, remember I said carrying value is equal to cost minus accumulated depreciation, right? Do you agree?
Yes.
Yeah, so we had accumulated depreciation at the beginning of the year. So we need to add the depreciation for the year to get the accumulated depreciation on the date that we sold the asset. So what we basically do is we take the 4,480, we add it to 36,600, which was the accumulated depreciation at the beginning, and then we get the accumulated depreciation at the date that we sold the asset. So when we take the
Yes.
total accumulated depreciation, subtract it from the cost, we get the carrying value.
Okay. Thank you very much.
Makes sense now.
Yes, sir.
Yeah, so I'm gonna end the masterclass there. If you have a question, you can just shoot it right now. I'm just gonna show you how the course, the mastery accounting mastery course looks. Just gonna load it up on my laptop and show you how it looks. And then after that, I'm gonna do the giveaways, right? If you're still here and you're interested in the giveaway. So I'm just gonna share my laptop screen and stop sharing from my. Make sure that you I was telling my team that you guys better can you guys hear me? Okay, cool, perfect. So I'm just gonna show you my screen. I'm just gonna show you my screen. Can you guys see my screen? Yeah, so I'm just gonna show you how this, I don't know. Okay, cool. Matric accounting mastery course. I'm just gonna preview. So this is, I'll just preview it as a student. So this is the accounting mastery course, 4-hour plus video. So this is the curriculum. I take you through the basics, and then we keep on building from it, right? Your income statements, your cash flow, your balance sheet, your notes to the balance sheet. So start lesson. So I'm gonna send the link whereby you can get the course, but after you get the course, you get the link. You can sign up for this account over here, and then this is how you're going to see the course, right? So it's a video course. So I was watching the course as well. Always revisit it. So it's slideshow. You'll get like basic principles whereby I go through the principles using slides and whatever. And then after, let's say for example, after you're done watching the video, once you're done watching the video that introduces the principle, you have a quiz that you can answer, right? It asks you like questions, which one is the correct accounting equation. So this is just a fresher question, but the more you go progress, you get more questions on it, and then you can complete and continue. So as you move through the course, you see that it's calculating your progress. So it says 10% complete now. You watch this video as well. Uh, you watch this one as well, you move to the next one. It keeps on calculating for you that, okay, cool, now you're 20% complete. And then you move into the next one. So this is a jam-packed course. I'm going to share the link on how you can get the course. And so the main goal is to help students not to spend that much on tutoring, because you can get it once off payment 250, and then you get access to all this jam-packed video content course. And lastly but not least, once you purchase the course, you get an invitation to my exclusive master classes. So I host like 2-hour master classes twice a month. So once you get the course, you get those access to those exclusive master classes, right? Those accounting master classes, which is like 2 hours. Incredible, eh? So let me go back to my slideshow. Let me give you guys prizes, eh? Spent a lot of, let me just do this. Can you guys see my screen? Can't see the chat now. See the chat. Let me view the chat here. Is there anything on the chat? The chat. Oh, yeah, okay, cool. There's nothing there. Yeah, so I'm going to share with you the link to the mastery course. And once you get the master course, then you get access to my 2-hour master classes, right? So I love teaching. I love teaching in my spare time. So yeah, the prizes, I'm giving away three prizes. First one, mentoring by Blessing M, right? So I get to mentor one person. I'm only gonna take one person, and I get to mentor them like on a holistic approach, like goal setting, long-term goals, working on your different parts, spheres of your life, your academics, your financial, your spiritual, and whatever. So it's just a holistic approach on mentoring, so that I give back to someone. So I'm only going to choose one person that I'm going to mentor. And then the second prize is access to one exclusive masterclass, that 2-hour masterclass, whereby I work through different question papers and lots of questions, and then you get to see my thinking process. And the last one, I'm just giving you guys airtime money, which is 100 Rand. So you guys can choose which prize you want, but the catch is only 3 people are going to win. So how do you get these prizes? Someone may ask, right? Let me see if you guys are still on the chat. Yeah, so someone may ask, how do you get the prize? So the catch is, we're spreading the word. We want to reach more people. We want to change more lives. So how you get these prizes is you can do a number of things. First is we can go up to Instagram or TikTok. Those are the two platforms that you can use. You go take a picture of, so I'm just gonna put up a picture of the masterclass with Blessing, like the slide. The slide is up. You can take a picture from your phone and post it up on Instagram. Make sure that you tag me. I'm gonna post my handle there by the chat at Sia Mlambo underscore ZA, and also make sure that you tag Genius App One, right? So those are the two accounts that you must tag on Instagram if you're posting on Instagram. Tag Genius App One and also tag me Sia Mlambo ZA. Secondly, alternatively, if you follow me on TikTok, the same handle, the handle is Genius. You can just search my name, Blessing M. Tag me, post a video, take a video here or whatever, post a video. Give me an honest review of how the session was. So the catch is you give me an honest review of how the session was, and then you tag me, and then I'm going to choose 3 people that are gonna win. So after doing all this posting and whatever, what you can do is you can take a screenshot, send it to me on WhatsApp. So take a screenshot of the thing that you posted, send it to me on WhatsApp as well. Above taking me, just take a screenshot, send it to me on WhatsApp so that I'll be able to choose the 3 winners there. So it's just gonna be based on whether I like your review of the session and how honest were you on the review, right? Shouldn't be positive stuff only. You can also say negative stuff. I'm happy to take any constructive feedback and hope you enjoyed the session. Hope to see you on the next masterclass. My name is Blessing and I'm signing out. Hope to see some hearts on the screen. Lastly, but not least, you can just pop me a message on WhatsApp, tell me how the session was. And it can better your chance of winning one of the prizes. Anyway, goodbye. See you next time.
Can I ask?